Good evening, guys. Ken at Tortoise Capital. This is the Saturday night podcast for Swing Trade Framing, October 15th, 2022. Let's go ahead and get started with Chi Wing Chong's Z scores of the RL30 slope. We still have the market, SPY, finance, tech, and materials hovering right around the Z-1 score, so still in bad shape, getting prepared to collapse. Only energy in this cycle is looking good. It's coming back to zero, so this is actually not good for the other sectors. If energy prices are going up and energy companies doing well, then that's going to be bad for the rest of the sectors. So we're in more of a critical state than ever. Next, looking at the comparison between consumer staples, the defensive plays of XLP, and consumer discretionary XLY. You can see the S&P still stuck here at Z-1. Staples had taken a real hit and are starting to recover faster than the market, and XLY, I think, driven a lot by Tesla's collapse. They're down 50% from their high. Consumer discretionary are suffering and are coming into a critical state at -1. So this looks like a shift back towards the staples and defensive plays as the market prepares for what Jamie Dimon at J.P. Morgan called potential 20 to 30% additional losses. Nobody wanted to hear that. All right, let's get into Ken H's trade frames. All right, so here's the Qs. You can see that on the weeklies, we are well below the collapsing dragon and PSAR flip. So this is large downward pressure. We see Ken H has been trading this considerably. His last trade was a stop and reverse, 2 positions cover, a re-entry short, and that is looking pretty solid right now. Here's the stop and reverse. That's this one. A second position. He considered a third one at the collapsing dragon. He finally took this one. The gap up caught him a little bit, but then the re-entry is deep in the money and looking good. And more to follow. I think if this gets below 260, I think you can add a second one and then watch that position carefully and make the most of the sell-off. I think there's a real good chance of big gap down Monday. I'd be looking, I think, at preserving some of the gains you have on all these open short positions right now, if I'm being honest. I think if you take a look at Thursday's price move, that would very easily translate to a Monday after a gap down, so be cautious on that. AMD, Advanced Micro, it's broken all the support here and is in free fall. The next support levels are at 40 and about 55. He's short from here on the collapsing dragon. That's in great shape. It closed very poorly on Friday, so there's his short below the collapsing dragon. That's in good shape. I'd look to add a second position there. That's I think a reasonable short. Devon Energy, our favorite little oil company here. This little sector cycling here between 78 and 52, and then almost like an inside play from 74 to 58. It's getting that compression around 65. And the price right now is stuck right in the middle at 68, and there's a breakout at 74, And then I think that's a break right there at 67. Because of this gap, you would get a nice move probably to 60. So from right here, I think you could play a really tight risk box and play energy in either direction. And here's his stop and reverse from this move. He was looking for the breakout. It failed, so he cut the loss, stopped and reversed. Considered a collapsing dragon once, twice. He looked at, should have taken that exit right there. Could have taken it here. Did take it here, so that's still a good trade on one position. When you don't have these compound entries, you can give it a little more leeway. That's more than we normally would like. But with just one position in, that's a pretty nice move, because here's what his risk would be, and that gives him 1, 2, probably almost 4R. This is a stop and reverse exit, and he looked at an exit here. Somehow held it through here. I don't like that. I think you should have been out here. But he holds on for a little bit more, and I think as that started rolling over, he said, you know what? It gave me a chance to get a better exit than I deserve, so I'll just shamelessly take it. I like that decision, and now he's got a fresh plate right here at 68, and I would say long at 69, short at 68, and look to get back to 63, 61, 58, and 56. I think we'd be ready for that. The one thing, though, is that the little bump in energy, that could keep going. So got to be prepared for that in both directions. Here's Exxon Mobil in the energy space. And this is the point I was making, that there may be more lift in this. The only thing is, this has been a natural upper limit right around 100, and the trade has been between 84 and 100. That's about a 15 or 20% move. This is a nice SSC entry. He played the second position here. Quick exit, that's proper. And I like this one because from here you can play to 103, and that's about a 2 to 1. And then you could play that to there. That's about 2 to 1. But if 97 breaks, that'll drop pretty fast to 95 and 92. So I like that in both directions. But energy's clearly extended. Nucor Steel, one of our steel companies, has had a nice range from 105 to 145 with a midpoint around 130. Here's his, there's a SSC right here. Technically could have gotten here, but after the gap up, it's cleared this enough. He gets a second position, a quick exit. Now on the collapsing dragon, gets the first, second opportunities to get short. Those two were the non-entries. He covers here and then stops and reverses. Cashes that one on the S. That's really a Kata 2. The SSC would be right around in here, but he's got 3 rising lows. So Kata 2, nice trade. And this one I think is perfectly postured. There was enough of a sell-off on Friday that this looks like stuck right in the middle of that range. So you have a nice first leg tactical trade, and then if either one of those break, you get a second position long or a second position short, and that is ideally postured for unbiased directional trading. Next up, Halo, healthcare sector, a biotech company. This has the form of a Kata 2. It held support around 40 where it held last time. It went from 40 to 50. It's, a third of the way there. So there's still 2 scoops of upward movement there. This double bottom feels strong. There's a support level here. It's cleared all of this junk. So any breakout from here, this whole price structure in here is not resistance. That was just a free fall. So there's nobody going to try to buy it on the way up to cover their losses from there. So this has free running till 49, which is a $4 risk, and if you can play $1, that gives you 4 to 1. Yeah, I like that. I also like the short at 44 because that'll get to 42 in a hurry. That's a 5% move, and you're talking about a 30-cent risk. That's a 7 to 1 reward to risk. AVLR technology. Boy, this is an odd one. I don't know if I like this one at all. This thing has been hugely volatile, and then all of a sudden for 8 weeks, nothing. Untrustworthy. I notice it. I just wouldn't trade it. Don't. But if you do, short here should get you to 93, 92. I just don't think there's enough room in there. It may meet some patterns for this. I can see what this is. This is a Godzilla style. But that's just, there's something odd going on in here that I wouldn't trust. That's an unnatural behavior. I would recommend passing on that one. Amgen, on the other hand, has lots of volume. At 251, has skyrocketed all the way back up into what has been the upper limits in the past. So you wouldn't be surprised to see this fail and roll over right here. It did the last, 1, 2, 3, really 4 times. So if this breaks at 250, I think you could trade that with a target of 245 for a tactical trade. And then if 245 breaks, this gap will just completely collapse, and there won't be any buying until it gets down around 230. So if it breaks through 245, that's $15 a free fall. So you could manage, even with a $5 risk, you get 3 to 1. I like that. Hard to see the upside to this. It feels like it's topped out, but I would be postured for the short side. First Republic Bank. Here's a Godzilla for you. Why do we say that? Because it's been smashed on the 150-day look back. The 30-day look back, it's at the bottom of its stack. 10-day look up, bottom of its stack. The 5-day volatility is off the chart, but it's stabilized right here on Friday. So that makes you think, if it holds above 112, this could be a move to 130. So you would target a move to like 125, maybe a $15 move, give it about $3. But if it breaks below 112, just pile on. That's a good one. Very vulnerable. Probably an earnings issue. Peloton. Hard to believe they're still in business. Just a company that's bleeding from the ears in search of a business model. This probably just reflects what they're able to get from their little software sales. Not much room left on the downside for a short. There might be a tactical trade up in here, but this looks like just an opportunity trade. I couldn't recommend them for the long run. I don't see how they make any money. But certainly tradable on the short side. Two simple holdings. Industrial sector in trucking. Along the whole economic slowdown, and it is collapsing in front of our eyes. Again, this one is this is thinly traded. You can see that just from the size of all the gaps. I don't really like it as a swing trade. You might be able to get a bounce from here and then decide to hold it if it could get to 670, and then keep 20% in the hopes that it blasts through that gap. That's a lot of hope and wishing. To me, the reliable move would be below 6 for a short-term tactical. I really don't like the. It's such a small company. I don't think I wouldn't recommend it for our style of trading that much. To be honest, Redfin Corporation. Just a drop from 54 to 4. Real estate service. This is all just picking over a corpse. Yeah. So this one, you're getting from the Godzilla, and he's short from here, so he's liking it. Short from 5 to 4. I mean, that's a 20% gain. It's hard to argue with that. I think I'd have my stop right around in here though, and preserve that cash money. Feels good. Looks pretty good. All right, that's everything I got. We'll get this published and posted, and we'll see the creativity guys tomorrow, and back at it. Take good care.